lot of trader social media today, a lot of different posts and different groups online, and I'm seeing it over and over again. We got the rug pulled on us. It was a big bull trap, biggest bull trap in the world. Um, and I can't say that I agree. I completely disagree. I don't see anything about what happened as a bull trap. I think of a bull trap as something totally different. And today's sell-off did not take me by surprise in the slightest, not even a little bit. As a matter of fact, if you watch the video I posted last night, this one right here, then you absolutely know that what happened today is exactly my base case for what I thought was probably gonna end up happening. It played out exactly the way I thought it probably was going to. That's why I named the video from last night. NVDA earnings beat, but I'm still bearish because this was easily something you could see in the price, in the positioning on the charts. And when the market opened up today, let's go to the 2-minute chart because that's what I was trading on this morning when the market opened. We opened up here and these are my breadth indicators up here. I'm telling you the Russell was 9 times more buying volume than sell volume. The NASDAQ was like 7 times more. SPY was like 6 times more. Tick had not even dipped below zero for well into market open this morning, probably an hour in. It had not even been below zero for 1 minute, I don't think. We had a high tick, we had a high ADD. Everything looked bullish, but I was still not buying and not buying calls. And the reason I wasn't, well, was because if you watched the video last night, was because of where we were on this chart. We were in between 673.50 and 675. That level comes from when Trump sent out them tweets a few weeks ago. That was the top of the sell-off, and that's been a major level in the market ever since that day. And when we were all gapped up and like things were going good, I kept saying over and over, if we get below that level, it's going to be bearish. And well, we're below that level. And as of yesterday, we were already in a daily downtrend. We're already in downtrends all the way across. So as long as we're below that level, there is no reason for anybody to even think that buying calls was a good idea. And after earnings last night, even with the gaps up, even with everything, it remained not to be a good idea as long as the market was below that level. And so I was really kind of irritated when the market opened up today because we were just stuck in this range and I'm just waiting, waiting, waiting. And then I literally seen it just as soon as it happened because we started to get a higher high on this 2-minute chart. And instead of getting a higher low and continuing up like it should have if we were going to be bullish, it immediately failed and started going straight down. I mean, I'm telling you, right here on this candle, I was already looking at it as a look above and fail. And I did go short on the failure of it not giving a higher low. Unfortunately, I was a wimp and I sold at the bottom of this range because I was just, I mean, I figured the gap was probably going to close. I figured we were probably going to go down, but it's that bad trading psychology of lock up your profits, for certainty. And you can tell I'm FOMOing because I didn't hold it down. But I just in case it was going to stay in a range, because that was what it was already doing, I I sold, one little tiny green candle and I'm scared and I sell because I'm worried it's range. I don't want to lose my profit, but whatever. That's my psychology issue I need to get through. Um, regardless, it clearly was a look above and fail. You can clearly markets when they top, it's a process that builds out. And you could see it just right here on this 2 minute chart. It built out a top, started to make a higher high, um, and then a look above and fail. That built the top. Well, I'll tell you, when we get to the bottom, it's not going to build out a bottom. It's just going to be big push down like today, big mass volume. It's going to capitulate, and we're probably going to get a big ass hammer candle that day or something like that. And then it'll be a V-shaped recovery. So the question now becomes, I think there's a high probability that we open with a gap down tomorrow. It's not for certain, but it could definitely happen. So the question becomes, if we open with a gap down, are we gonna buy puts short at the bottom of the move? At the lowest lows on a gap down after a massive move down like it was today, are we going to actually try and short at the very low of the lows after a move like that? That is a dangerous ass thing to do. So something I've been using as a gauge to kind of try and figure out what the market's going to do and help me with my decisions is I'm looking at the HYG chart, which is junk bonds. And the first thing I notice when I come over here and look at the junk bonds chart today is it never broke down below yesterday's low a day. So that's a data point for me to say I probably don't want to short if we open with a gap down tomorrow. Um, I'm also going to be looking at market internals. I'm going to be looking at breadth, sell volume versus buy volume, tick, ADD, position of other major players such as NVDA, such as, Robinhood, such as Microsoft, Tesla, etc. You know, what they're doing and what their charts are doing before I make a decision like that. Plus, I have a set of gap rules I use on top of that to help me make that decision. But I am saying now that shorting tomorrow on a gap down at open, you're playing with fire. You're definitely playing with fire because if and when this thing decides to give a little snapback, it's probably going to be pretty hardcore, don't you think? After going straight down that hard, I would think so. So let's go over to SPY and let's look at the daily chart because as soon as you look at it, there's something you should notice right off the rip. Okay. I'm looking not at SPY right now, so let me pull it up. All right. What do you notice right away looking at the SPY daily chart? Oh, it's like looking at a mirror, like there's a mirror in the middle. It's the same on both sides. Today and that day Trump sent that tweet. Pretty much the same exact moves from the same exact locations. And if you look at the volume, pretty much the same exact volume on them. So what happened after that move last time? Well, we opened up mid-range the next day and kind of went back up, right? Definitely not saying that's what's going to happen because this sell-off, we're in a totally different situation than we were in that sell-off. This one, more like a flash crash. This one over here, not so much. The big difference being we're already in a daily downtrend. It's already a lower high off of that. And on top of that, the other big difference, we have all this overhead supply above us. We didn't have that over here. So there's a lot more bearish data points on the current sell-off than there was on the initial sell-off. The other big thing that I'll note is we actually closed lower than this very important inflection point over here. We closed below it. And also, when we were over here, we were still above the 50 SMA. Now we're well below it. We're heading in towards the 200 now. Actually, we're still pretty far away from that. But so if tomorrow, if we get price acceptance under this red box between 654 and 652.50. If we have price acceptance below that, that opens up the market for big trouble. And why is that? Well, let's take a look at the weekly chart. Look at this. One candle, two candle, three candle, four candle were the bottoms on this level. That means this is a pretty damn important level to hold. We technically closed just barely below it. So price acceptance below that, I mean, I already have it mapped out here, so you get to cheat a little. But if we have price acceptance below that, this is the weekly chart. Where do you think we're going next? If we get down here and get a lower high, where are we going next? Most likely. The obvious spot is right here, 637.50. Mark it on your charts now. It's the next major inflection point. It's the weekly close here, previous flat top here. Pretty important level. So that is a level that if we continue to move down, that I would look for the higher low on the weekly chart, meaning on the weekly trend, we're up. This will be our higher low, and then we continue up. Do we end up catching a lower high after making that higher low and end up with a reversal on the weekly chart? That is absolutely a possibility, but it's not something I would be thinking about at this point. The market's not yet crashing and going to zero, but I mean, as you look out through the different sectors, as you look out at the different charts, there's no doubt that it looks like, at least for the immediate future, that it's in trouble. But it's doesn't look that way for multiple weeks now. Just people, I mean, I guess people just haven't had enough experience with charts and markets and price action and trends to know that that's what it was. But I mean, I can promise you that if you go through my material, even before we broke down, even when we were gapping up to new all-time highs, I was talking about warning signals. The warning signals were that when you looked at breadth back then, the only thing moving the market up was basically NVDA. Uh, our breadth, our like RSP charts were showing us that nothing else was moving up. And that was a big red flag from the get-go on those initial gaps up. Michael Burry closed his hedge fund just a few days too early, but isn't that the way it always happens? You always get screwed like that. So essentially, if we stay down here, get a lower high, I think we're probably headed to this extremely important level. Okay? That was a really bad straight line. I get it, but whatever. But let's look at our more immediate future. Um, let's take a look at the hourly chart here and try and get a plan. Um, well, let's see. I will say this, if we do get a snapback tomorrow, I probably wouldn't consider taking longs until we get back above probably this level here, which is our expected move low. Market makers don't like us to be below the expected move. And so maybe they do push it back up here. I don't know. But I wouldn't go long and definitely note that if you do go long, you're trading counter trend. We're in a downtrend. But I wouldn't go long unless you're above 657.37. Um, if we open gap down, like say we're gap down here, I would stick with gap rules. Gap rules are um, we get a test and failure of the overnight low. Price gets back above the opening print, and um, risk reward makes sense for the trade. Also add in that market internals are telling you you should. So what would that look like? That would look like market internals. We open way gap down tomorrow. Market internals are screaming, negative 2000 ADD, negative 1000 tick, things like that. And let's say those start heading towards zero. Plus, we get all the scenarios together where we get a gap, we're getting a gap close, then, you take a long to close the gap. You definitely get out of there at yesterday low a day. And then the base case is once you get there, you're looking for a lower high to continue lower. So if we do open gap down, I probably wouldn't consider taking a short until we close that gap. And then we have some type of inverted hammer candle that you can use to manage risk off that's hanging off the yesterday low a day. You could put your stop up here above the top of the candle and enter at the bottom of the candle and then just, target down here. So, it is possible we get a day two continuation with the selling tomorrow. However, I don't know that we have a big enough catalyst to justify that. It's not like a big FOMC event. It's not like a big NVDA failure on earnings. It's none of those things. It's really just people's position. People were probably hoping, NVIDIA was going to bring the market back to all-time highs. All these people that bought up here became disappointed that, the market wasn't up here. And as soon as that failure happened on SPY and QQQ this morning, they said screw it and sold their position, thinking that it's probably going to go lower and got the heck out of Dodge. If you go ahead and you look at the market internals today, you can absolutely tell without a doubt that there was tons of new money sellers today. Um, I'm waiting for the volume to load. It's taking forever. Let's see. Tick spent 63% of the day on the downside today, and cumulative tick was negative 5,000. That is basically insane. Look at the out volume today. I mean, negative 810 million to the sell side. Holy wow, wow. And we opened way up here. So that's massive. That is massive. The other thing is if you look at like VIX right now, like the 1 day VIX, it's the highest it's been except for in April on the tariff. It was way higher. But since then, today was the highest it's been. You can kind of see we're as of current, let's look at the ES chart because right now Eastern time it's 8:30. Let's see. Yeah, I mean, since close, we've been slowly grinding to the upside. Doesn't mean nothing. We could still open with a gap down, but all right, let's move on to hopefully some actionable ideas. I'll just real quickly show the QQQ chart. You can see on the QQQ, we closed absolutely more definitively lower below that level. Um, that key inflection point on QQQ, much more definitively below it. And the weekly level that we're looking at on QQQ is much closer. It's around 581.25. So it's definitely a little closer on QQQ. We're not far from it at all. So just little divergence to make note of. Um, on QQQ, I mean, the base case, what I would probably be looking for over here, if we're gonna stay below that level, what I would be watching out for would be a pullback up to here and then a lower high to continue lower. Something like that. This would probably be a good location to take a short, with the right setup, with the right market internals and conditions. Let's take a look at NVIDIA because, much of the sell-off was certainly brought to us by NVIDIA. It definitely started before, I mean, the sell-off was already pretty hardcore before NVIDIA really started kicking into it. And then once it did, NVIDIA really started, showing up and selling. Not gonna lie, I had a lot of fun trading today. I know it was a sad day for a lot of people, but markets don't die forever. They'll be back. So, just hang uh on the video. What this is the daily chart. And I want to point something out. Look at this. Look at this. Attempt at new all-time high, fail. Attempt for all-time high, another attempt, fail. Another attempt, fail. That's three failed attempts. So the AI trade is absolutely slowing down right now. Um, I don't think it's over, and I don't think NVIDIA is in a bubble. I don't. Think Palantir trades like I, I don't know this to be fact. This is what someone told me. 350 P on NVIDIA is 50, right? NVIDIA is literally like a money printer. If you take a look at their financials, I mean they're 100% 100%. I seriously hope I was already sharing this screen. I think I was, if this video is messed up, because I was just looking at my Zoom and I'm not sure I've been sharing this screen the whole time. I'm going to continue like I have and hope and pray to God that I have, because I'm not recording it again. Wow, look at the out volume on the video today. I mean, that feels like it almost could be enough to be a capitulation. Jeez, just look at that. You know, so here's what I want to point out on the video. If we lose this level, like basically right here, this one, uh, NVIDIA is opening itself up for a whole lot more downside after that. That's going to put a ton of overhead supply on NVIDIA. So this is a vital level. If we're down here and get a lower high below and get price acceptance below, it's going to be hard to get back above here because everybody that bought from this point forward is going to be underwater at that point. So if we get below that, every time it comes back, and people are going to be like, whew, finally I can sell for break even. And then guess what? Comes back down. Uh, so that's basically how overhead supply works. So what we need to look at is, if we get price acceptance below here, NVIDIA is in trouble, big trouble for the immediate future. I definitely don't think NVIDIA is over. I definitely wouldn't run out and sell my shares if I owned it. Like none of that going on yet. Okay. I don't think we're there. We're not there. But for the immediate future, acceptance flow there, it's in trouble. Okay. So as of right now, I don't have any trade ideas planned out. I'm gonna pause this and see if I can find some ideas. Go through some charts. Okay, here we are on Disney. As I've been sharing as a trade idea since last week, lower highs below 105 short to start retracing some of this thin structure over here. I can tell you I have been short on Disney since it dropped below 105 yesterday. So I caught the entire move today. and I'm up massively on the trade. I probably stupidly could have been stupid. I haven't sold it yet. I literally just didn't even close it. Might have been a bad choice. If it is, whatever. I don't care. I'll survive. But for let me take a look at the hourly chart. But look looking at the daily chart, I would be looking for any pullbacks to 105. You could catch a lower high off this again and then continue down and then reassess at this gap level and then lower high into the gap, reassess at this level, and then gap close. So obviously what I'm hoping to catch, if I end up holding it all the way, what I'm hoping to catch is a close of this gap below here. If I do end up catching that, I can honestly say that I will probably have like 1,000 or 1,100% return on that trade. If I don't, then I don't. But that's what I'm looking for on Disney. Uh, Another trade I've just continually shared is Tesla, and I do want to take a look at Tesla chart because I think Tesla was very interesting today. Obviously, Tesla started bearish today. I mean, no, I'm sorry, it started bullish. It was moving up in the morning. It looked pretty clean to the upside initially on the smaller time frames. And my trade idea on Tesla has basically been lower highs below 396.7. Obviously, it closed just below 396.7. So I would say that Tesla showed a lot of relative strength in this sell-off today. I mean, if it would have been acting like other stocks, it would already be down to 365. So I'm thinking Tesla may have some strength to it. Um, so if we do start to get some recovery in the market, you know, if we start to get some moves back to the upside, if and when, I would be looking at Tesla to do something like this. So that would be higher lows above 412.50. I will remain open to the downside of lower highs below 396.7, eventually targeting this 365 level. Um, I will remain open to that idea if the selling continues. So those are kind of the two paths that I see on Tesla. Let's just take a look at the hourly chart in case maybe there's something we're missing because I haven't even looked at it. Let me erase this stuff and zoom in to the hourly chart a little bit here. I might move this level down a little right there. Um, yeah, I think I'm good with that. Otherwise, I'll remove this yesterday high a day. So once again, just to reiterate, if selling continues and Tesla decides to break down lower highs, initial target 386.25, look for another lower high, target 465 would be what I would be looking at. If and when Tesla gets to 365, I'm not sure if I said 465 or 365 before, but it is 365. If and when it gets to that level, that is a perfect spot for a higher low on the weekly chart. So I would definitely watch out for that level for buyers to step up there. If you take a look here, you can see why that becomes a key level. That's the level that this big breakout to the upside happened from. If that level ends up failing and we get a lower high below it, I mean, kiss Tesla goodbye. Okay. Kiss it goodbye at that point. it's over. Then we're creating a weekly double top and everything's going to hell in a handbasket. But for today, despite there being currently a big inverted hammer bearish weekly candle in the making, um, for now, and despite the fact that we're technically under all this overhead supply, I felt like it didn't sell off so hard today. It showed some strength compared to other names. Absolutely showed some strength. Let's take a look at Hood, because Hood has been basically one of the worst offenders. Every day there's been a sell-off. Hood has been one of the absolute worst offenders. And as you can see here on a daily chart, look at this. It had a double top and then it came below, then it came up, retested the double top, gave a lower high, came down, came back up, tested it again, look above and fail, came down, filled the gap. So, um, I mean, I think it's a little overextended on the sell side. Uh, we probably want to keep this bottom gap level as a key level. Being the bottom of this sell-off, we'll get rid of this. Um, you might, I think we'll just keep this green level here, 120.5. Remove yesterday high of day, flip on down to the hourly chart, zoom in. Uh, Let me go to the left and see where this level comes from, 107.6. I'm not going to be able to see it, am I? Maybe. Okay, 107.6. I think I can get rid of that. All right. Then back in here. I think I will take this level and I will move it up here to 105. Um, and get rid of this thing thin below. Could probably dim this level out a little since it ran right through it. Take that label off. All right, how can we trade this? Let's go back to the daily chart. I'd be open to maybe looking for some type of pullback on it if it can get a little snapback. And then I would probably want to get out of that at 113.75 and then find out if and when at that point if it's going to give us a lower high to come back down, you know, target back towards the bottom. And then if you can get short here, if and only if sellers step back up there, because otherwise it could end up back at this level and you definitely want to watch out for shorts anytime it gets near 120.5. Um, but this would be the initial place I'd be looking out for shorts, 113.75, get short there, and then probably looking for a new lower low. You might watch out for 100 because that's kind of a psychological number, and it just seems that numbers like that will play out quite a bit. All right, moving forward. Okay, we're looking at the AMD chart now. AMD was a pretty big offender today, down 7.8%. Um, and look where it went. Almost looks like the QQQ and SPY chart. This is the tweet day, and here's today. you know? We're sitting right at the top of a previous gap. So that in mind, it didn't fill the gap today. So there's two paths we can look at for tomorrow on AMD. I think this is a top watch for tomorrow. Um, if it moves up above 214.85, high or low, I would come back and target this 224.45-ish level to 226. The other option is it comes up, pull back to 214.85, rejects there, and we get a lower high, come back down, target top of the gap, then first target, then lower high into the gap. And this level right here, I definitely would not try to hold through the entire gap. This 186.75 is a major, major, major level on AMD. Um, I would be willing to short into that level, especially if we can pull back to 214.85 and sellers pick up right there. I'm gonna say this is my out of charts we've gone over yet. I haven't gone through everything. This is so far my top watch for tomorrow. AMD, without a doubt. And I haven't been writing this down, so I need to start writing down my trades. And for fun, let's just look quickly through some of these trade ideas that we went through that were out there yesterday. It was reject 120.5 on last night's video. Looks like that absolutely happened. Uh, for Google, I said retest 291.65 long. Um, I think initially that is, or no, initially Google opened gapped up this morning and it went for a quick scalp long initially and then failed. Um, Tesla, we already know what happens there. IWM failure of 231.95. Let's see what happened there. 231.95. So it did. It failed. Look above, fail. That absolutely happened. MU rejection or look above 230.25 and fail. I know MU definitely had a massive sell-off today. So look above 230.25 or reject. It clearly rejected 230.25 right out of the gate today. So that was a good one. Microsoft rally reject 488.75 or 493.20. Microsoft clearly rejected 493.20. This is why I'm just going through the trades that I posted last night just to show you, A, this stuff works. B, how important it is to do this so you can be prepared ahead of time and know how to react when the market does certain things. I make these lists every day and I put them in front of me and then I watch as many charts as I can. And if and when these things happen, I do my best to react to them as they happen. Netflix, uh, 106.15 short if previous all-time high fails. 106.15. I don't even have, oh, 106.15. All right. So it just barely got there. So I won't say that that trade ever started to play out. Um, Look what I wrote here. SPY QQQ may open with a gap up. If so, gap rules in play. However, China highs for rejection short. We all know that's absolutely what happened. And then the other trade idea I posted on a video last night was Disney rally reject of 105. So just pointing out that 90% of the trades I shared on last night's video played out perfectly. rally reject 105. I mean, it went above and it failed. So, uh, I mean, they played out. These other ideas, these are ones that I had this morning when market opened. Um, so I didn't share these, so I won't go over them. Um, but I'm just showing this stuff works. I really don't want to make this video any longer. I may post some additional trade ideas in the morning before market opened on Facebook and X. You can follow me, Dow Trader. That's TAO space trader. Thank you. I I really hope these videos are helpful to those that are watching them. You know, please like, follow, share, subscribe. It only takes you 2 seconds. I've proven day after day these setups work. Uh, and I'm planning on putting forward a whole lot more content about how to read price action so you don't get caught in what people think are traps, like happened today. I don't consider today to be a trap. A trap to me would be something like, let's say, to me, come on, let me write with my pencil. To me, a trap would be something like, okay, we're looking at new all-time highs. The market opens at new all-time highs, gapped up, and then we sell off straight back down below, you know, and do something like that. That's absolutely not what happened. This was not a trap. The reason this was not a trap, once again, is because we were already in a daily downtrend. We already had overhead supply above us. The market was at a perfect location for a lower high. To me, what happened today was standard trend reading and price action. So, have a good one. Uh, Practice strong risk management above all. I'm out.